Good afternoon, ladies and gentlemen. This is Mac from Cryptstar Staking, your #1 source of DeFi crypto news on the tube. And today we are starting a new course. This will be an introductory course to my channel. In today's episode, we're going to be focusing on the course overview for this, as well as we're going to be talking about what the blockchain is, the very basic fundamentals of blockchain in layman's terms. So people who are new to the channel, watch this episode, most important episode probably. From there, I'll be talking about all the different episodes that will be coming after this, which will be things like security, private keys versus mnemonic keys, wallets, etc. I've done previous videos on this, but I want to kind of put it into a course for beginners and groups of all ages and all sort of, if you have a disability or something, show you guys how you guys can access the blockchain and make use of the blockchain. The next episode, I want to be talking about what I wish I knew before I started blockchain, or kind of what the biggest lessons I've learned, the biggest takeaways I've gotten from blockchain. I've been hacked, scammed, rug pulled, all the above. And I'm not a stupid guy. At least I hope I'm not. I try to pretend like I'm not the stupidest guy in the universe. But there are a lot of scammers out there. They get smarter and smarter day by day, especially during this bear market. So I'm going to be going ahead and making a video to show you guys how to watch out for scammers and keep your funds safe. From there, we're going to be talking about easy to use wallets, mobile versus desktop. And this will be for people who only want to use mobile or only want to use desktop, and how you can go ahead and secure your private keys and, easily get access to farming and dexes and staking and all sorts of things. Different blockchains have different ease of use levels, and I'll try and cover the most easy to use all the way to the most advanced sort of wallets and applications. After that, we'll be talking about exchanges and dexes, and this will be coming in probably one of the later episodes of this series. And this is a more advanced topic, so I'll be covering that. Before we jump into the agenda for today, make sure you guys hit that like button and notifications bell below. Help this channel grow. Let your friends and family know about this easy-to-use blockchain tutorial. Today's agenda, it is September 24th, 2022, and we'll be talking about the reasoning for the course. And from there, we'll be talking about course targets. So I'll make sure you guys are watching this course. You are in the target group for this course. And after that, we'll be talking about the course plans for the future, as well as what the paid plan includes and what the paid plan does not include. So the basic course, of course, is going to be free, so don't worry about that. Okay, guys? And last but not least, on the agenda today, we're going to be talking about the first episode of the course, which is what is the blockchain, and we'll talk about that from an IT perspective. So the blockchain from an IT perspective, as well as POW versus POS, and sort of the dilemma there. After that, we'll be talking about why blockchain is good for society and why eventually the whole world, whether they know it or not, is eventually going to move to some sort of blockchain technology, whether it be with CBDCs or with actual blockchain that we have as we have it now. I don't know, but it will be there 100%. All right, here we go. So, the course reasoning. Yes, there are a lot of scammers on my YouTube channel. If you go to some of my top viewed videos, I think MetaMask, as well as MetaMask recovery and those kind of videos, they kind of gone viral. And yeah, there are a lot of scammers on there, Instagram scammers, YouTube scammers, all sorts of things. I had people copy my video and repost it with their own sort of Telegram links, so that way they could try and scam people who are watching my YouTube video. YouTube at least caught it and told me about it. But anyways, I don't want that to happen anymore. Just come straight to me, ask me. I have a Telegram group, and I'm also going to make a Discord channel, so you guys can go ahead and just directly contact me, and I can help you without having to go through these scammers. Okay? There are many users asking for help, but don't know who to trust. They jump into crypto without a helping hand and get scammed or lose access to the crypto. Okay, that's one reason I'm showing my face here in this bottom right-hand corner of the video. I want to show you guys I'm here. I'm a real person. I'm not a scammer. I've helped out people recover over, I think, $1 million in crypto now. So I know what I'm doing. I don't ask for your private keys unless you really don't know what you're doing. And then we work out something so that you're safe. Okay? So don't get scammed by other people. Just come directly to me, please. A necessary basis for understanding most of my content is lacking, and therefore a base education model is necessary, which is why I'm creating this series. Probably be a series, maybe 6 to 10 videos, okay? And this basic education is necessary, I think, for enjoying the rest of the content on my channel, okay? So next, we're going to be talking about the course targets. So yeah, we have this course is going to target, base beginners to intermediate users, for people who don't have time or have difficulty keeping up with technology and really just need the basics to get started getting into crypto, and they want to be safe, keep their funds safe. All right. Some examples of this are retirees, office workers, or professionals that are not in the IT industry. So yeah, that's the targets for the course. Course plans. Of course, there's going to be the free YouTube plan, and this is going to have pretty much most of the features, right? So you can have access to my live streams. You can chat with me, ask me questions during the live streams, ask a question in the comments if you have any questions. Hit me up on Telegram. We can work something out if it's a really complicated issue, and we'll talk about that in a second. We're also going to do an email subscription basis. So $30 a month for an email newsletter with crypto recommendations, updates, and more. So I'll be talking about all updates to the crypto market, both macro and micro. Talking about the lower cap gems that I'm interested in, as well as the potential of other emerging crypto markets, such as DAG protocols. Okay, and from there, we're going to also have a per case or remote recovery help. So please contact me on Telegram or Twitter if you have any questions and want to discuss this further. Also, I have an email, mac@cryptstar.com. Feel free to hit me up there and we can discuss your recovery options there. All right, so what is blockchain? The course, the focus for today. So currently we have IT banking systems that the world uses, and they tend to use some sort of database. In this example, I'm going to use a MySQL database, and we have those databases located in various places in the world. So you have databases located in California or in New York, and they have replicated databases so that you can read them easily, and those are located in Texas, right? Texas or Florida, and that makes it so that users and institutions can access those databases very easily. Now, the biggest issue with the current fiat system is that you have the federal government, they're printing lots of money, pushing money into stocks and bonds, and the banks, they're the ones who control the databases that kind of push the buying and selling of these stocks and bonds, right? These are easily manipulated, they're closed systems. Now, they are regulated by the US government, but as we know, the US government just kind of prints money whenever they see fit without having a proper vote by the people, and that is the basic issue that blockchain wants to fix. All right, blockchain is a decentralized ledger, so instead of just having one database in California or New York, you have databases all over the world, and the inflation is set by the worker nodes. So the Bitcoin miner nodes are set in different locations around the world, and they know we can set a vote and change the inflation rate, but those miners, they're not going to want to dilute their shares even more. And inflation, we all know, that's the main issue Bitcoin's trying to solve. So it's a very psychologically speaking, nobody's going to actually vote for an increased inflation for that. And it's so decentralized, it's very hard to vote now for Bitcoin changes to the Bitcoin network. All right. Create a hard fork, which means the original network would still be around. Now with Bitcoin, you also have these decentralized nodes, and these decentralized read-only nodes, and these nodes can be located anywhere. So if you have a decentralized read-only node at your house, you can go and read that data straight from your node, and you don't even have to access it across the internet. You can just access it from your node directly using some sort of indexer or whatever. But that means that you can have access to all the bank files and everything straight from your house, and you can process that data yourself, and you don't have to worry about the bank hiding information from you and having the oligarchs do their dirty bidding behind your back. And also, like I said, Bitcoin, they have nodes all around the world. It's not an American thing. It's not a Japanese thing. It's all around the world. So even if America bans Bitcoin, Bitcoin's in all the other countries. So they can't ban Bitcoin worldwide. It's not going to happen. Proof of work versus proof of stake. This is a highly debated topic, which is better. So today I'm going to talk about why it's highly debated, as well as the differences between the two. Proof of work is you run a super processor or GPU that uses a lot of power in order to process the transactions. So like I said, you have the worker node, Bitcoin worker node in your house. It uses 1,200 watts of power. That's a lot of power, right? My supercomputer uses only 750 watts. Bitcoin node uses a lot of power, and that's why a lot of people are saying proof of stake is better. By running these nodes, you get the inflation rewards. Okay, I'd say that right here. Proof of stake, you require an initial stake to process the transaction, but that stake compensates for the power requirements of POW. So instead of having to run a high spec computer to process the transactions, you basically stake a bunch of coins, which shows that you are a stakeholder in the network, and that proves that you can process transactions. That gives you the right to process transactions. Other people need to get the same amount of stake in order to start processing transactions. So it makes it so only a limited number of people can process transactions, and they have to basically connect with each other and say that, hey, these transactions are correct, okay? That is why proof of stake is very power efficient. Now, the dilemma here is when a blockchain is new, many of the tokens are centralized. So in order for new people to get tokens, they must earn them. In POS, the original tokens are centralized and must be distributed by humans. So this actually goes for Ethereum as well, for proof of work as well. So it's not necessarily true that POS is more decentralized, but it's more likely to be centralized in the beginning because there's no proof of work. You can't just start up a worker node with high power requirements and start getting inflation rewards. You actually have to buy the tokens first, which means you have to buy them from somewhere, which means a centralized entity has to mint the first set of tokens, or the protocol has to be created with the multiple addresses having a balance. All right, so it's much more likely to be a centralized entity from the beginning. So I talk about that here. So basically POW is preferred because the users actually work and commit resources to the blockchain. And with POS, when POS comes first, it gives early adopters and founders reason to sell their tokens for a premium, therefore centralizing the network. Now, it can be assumed that POS is more centralized but more power efficient, and with POW, it's decentralized, a little bit more decentralized, but it's more power hungry. So that's just the basics for you guys. Now, why is blockchain good for society? So blockchain solves, I think, two core issues for society. One, the blockchain fixes one of the core issues of all major societies have had in the past, which is the issue of inflation, which kind of comes from human greed, right? With blockchain, the inflation is set and it's very hard to change. We talked about that just a second ago. Now, the middleman issue. This is another issue that humans have faced for centuries. Blockchain reduces the need for a middleman, the banks, as well as certain market brokers. With blockchain, you are your own bank, and as the technology becomes more and more user-friendly, it will be harder for the banks to convince people to entrust their hard-earned money with them. It does this with smart contracts. Now let's go ahead and talk about smart contracts and how they solve this issue. And this issue is known as the Byzantine fault. Basic layman terms, super basic for you guys to make it really easy to understand. You have person A, all right, and you have person B. Now, person A, you have a smart contract in the middle. Now, with person A, you have this really nice, juicy chicken, right? And person B really wants that juicy chicken. Person A has a lot of juicy chickens. Person B wants some juicy chicken, all right? Person B, they got that Bitcoin. They got that currency, right? So they want to send that currency to person A, but they don't trust just send that directly to the person. They don't know the person. It might be an anonymous market, right? Like eBay or something. So they send it to the smart contract in the middle. Okay? Now, the smart contract checks that person A has real money and real Bitcoin, and that person B has a real tasty chicken. Chicken's doesn't have any like defaults or anything. Now, in the future, this might be done with AI. Now, this is just a side note. Okay? Now that the smart contract has confirmed all this, the money can be sent to person A, and the chicken can be sent to person B. And there's no need for a middleman, no need for a 10% eBay fee. The smart contract takes care of it automatically using its sort of smart contract scanners, which, like I said, in the future might use AI. In cases of, digital assets, this makes a lot of sense because you don't need to scan a digital asset for, to see if the chicken's going bad, right? It's just currency. It's just a number. So you can confirm that the number is correct, and you confirm that the number from person B is correct and the number from person A is correct. So you don't have to necessarily worry about the quality of the chicken. And that's it for today's video, the basics of blockchain, as well as the new beginner's course that I'm starting for you Bitcoin enthusiasts out there. As usual, thank you for viewing. I really appreciate all the support you guys have had for the channel over the years, and I'll see you guys all in the next episode. Peace out, everybody.